Today I have my old friend and fund manager Rajesh Kothari in my newsroom. He of course is joining us from AlfAccurate, the portfolio management company. Rajesh, good afternoon.
Hi, good afternoon, Ajay.
How are you analyzing the market right now on both medium-term basis and a little medium to long-term basis after this big adjustment that happened? Follow buying is not really coming in, or do you think people have missed a big rally?
So let me first answer, the short and medium term, because in long term, of course, we will remain very structurally bullish on India's equity market. So in short term, the second quarter results is definitely going to be a washout quarter. You will see muted earnings growth across, across the sectors, across the company, and of course, you are going to see kind of a challenging kind of a commentary, as you enter into second quarter results season. In the medium to long term, we remain structurally bullish because of course, the macro factors like inflation remains low, the interest rate remains low, and government is taking the right steps to improve the confidence of corporate India. And I think that is very critical because NBFC crisis, the liquidity crisis is still continuing, and we need to make sure that there are any further defaults or no further major downgrades from the system perspective.
Rajesh, you were just telling me before the show started that you've been doing a lot of road shows, meeting a lot of investors, and the flows in your portfolio services have been going higher in the last couple of months. Tell us some of the message you are giving to the potential investors. Why are they imposing faith even in these kind of market? And also, what's the feedback you're getting from some of these high net worth individuals that you're meeting?
I think very interesting question. So, we travel across country and across regions, and one common message, what I hear from, smart HNI investors is that there is clearly a difference between, men versus boys. Earlier, if you meet any investor 2-3 years back, they used to compare XYZ product, which has given, say, for example, 2 years returns of 40, 50, 60% compounding, and of course, many of such, stocks are down. So now they clearly understand the difference between active management versus, giving to professional fund managers, and more importantly, risk-adjusted returns. I think their focus has now become more like a risk-adjusted returns rather than just absolute returns, because if you compare any product, it is not about the returns, but you also need to look at the underlying risk, what that product is taking while investing into businesses. So I think that's very important from HNI. They've understood it. And I think that definitely works in favor of players like us who has been focusing on superior risk-adjusted returns.